Okay, for question A, prepare a schedule of expected cash collection for November and December. Firstly, we have to find account receivable. For November, account receivable is 83,200, and after that we have to find November and December sales. For November sales, first we have to find the 75% of sales, and after that we have to find 25% of sales. So first, 75%, we have to times it with 340,000, and we get the answer for November sales is 255,000. So another 85,000 we put it on December. After that, for December sales, firstly we have to find the 75%, like November. We times it with 360,000. We put the answer, which is 270,000 on December sales. We got the total for November is 338,200, and December is 355,000. Next, for question B, prepare a merchandise purchase budget for November and December. Firstly, for November, we have to find the cost of goods sold. The question said that the cost of goods sold is 71% of sale. So, after we calculate it, we get the answer of cost of goods sold, which is 241,400, and for December we get it 255,600. After that, we have to add it with desired ending inventory, which is for November is 191,700, and 186,375. So we just add it with cost of goods sold, and we get the total needs. After that, we have to less it with beginning inventory. The beginning inventory for November is 181,050. For December is 191,700. The required production for November is 252,050, and for December is 250,275. For question C, we have to prepare cash budget for November and December. Firstly, we have to find the beginning cash balance. So for November, the beginning cash balance is 22,200, and for December, the beginning cash balance is 142,800. So we have to add it with cash collection. For November, we got 338,200, and for December, we get it 355,000. So we just sum it and get the total cash available. After that, we have to less the cash payment, which is include payment for purchase and other cash payment. So the payment for purchase for November is 196,200, and for December is 252,050. After that, for other cash payment, November and December have same amount, which is 21,400. So after we sum the cash payment, uh, and we just after we sum it, the total cash available minus the total cash payment. So we get the ending cash balance, which is November is 142,800, and for December is 224,350.
So now we move to question 1D. Prepare budgeted income statement for November and December. So now let's prepare a budgeted income statement for company Weller Industrial Gas Corporation for November and December. Okay, firstly, let's prepare for November. Okay, the sales is 340,000 minus cost of goods sold 241,400, and the answer is 98,600 is amount for gross profit. Okay, now other monthly expenses is 21,400 and depreciation is 21,200, and net operating income we get 56,000. Okay, that's for November. For December, sales is more higher than November. Its value is 360,000. Cost of goods sold also higher than November. Its value is 255,600. So sales minus cost of goods sold is 104,400. This amount for gross profit for December. Okay, other monthly expenses is same with November. Is it 21,400, and depreciation is too same with November. Is it 21,200, and we get a net operating income for December is 61,800. So now we move to question 1E. Prepare a budgeted balance sheet for end of December. Okay, now let's prepare for Weller Industrial Gas Corporation. It's a balance sheet and 31 December. Okay, for the asset is we get a cash. The amount is 224,350. Account receivable is 90,000. Inventory is 186,375, and PPE is a property, plant and equipment is a net accumulated depreciation. We get a 963,600. If plus list of asset, we get total asset. The amount is 1,464,325 is amount for total asset. Okay, now the liabilities and stockholders equity is we get account payable. The amount is 250,275. Common stock is 640,000, and retained earning is 574,050. The total liability and stockholder equities is 1,464,325. Its amount is same with total asset. Same with total asset. So the balance sheet is tally.
Okay, next, we move to the question 2, where the question is the direct labor rate variance. To calculate the direct labor rate variance, we need to actual rate minus standard rate times the actual hour. So, we got the information within actual rate is 7.2 ringgit for overtime hour, standard rate for 7 ringgit, actual hour is 1,400 hours. For the calculation, we need is 7.2 minus 7 times to 1,400 hours, and we got RM 280 unfavorable. So We move to our next question within direct labor efficiency variance. To calculate the direct labor efficiency variance, we need to standard hour minus actual hour times to standard rate. So, the information we have got is standard hour, we need to 800 times 4 hours per unit. Within, we got 3,200 hours. So, actual hour, we got 3,400 hours, and standard rate, we got RM7 per hour. For the next calculation, we got 3,200 minus 3,400 times to 7 hours. We got negative 200. So, negative 200, we times again to the standard rate, 7 hour, and we got 1,400 unfavorable. For the direct material price variance, we need to calculate the actual price minus standard price times to actual quantity purchased. So we got the two items within iron and copper. We start with iron. Within standard price is RM2, actual price is RM2, and actual quantity is 5,000 pieces. So the final result is 0 for iron. Within no variance for iron. So we move to the copper. Within standard price is RM8, actual price is RM3.10, and actual quantity is 2,200 pieces. Within the final result is RM220 unfavorable.
So now we move to question 2D. Question 2D is we must to find direct material quantity variance. Okay, the formula is standard price times actual quantity minus standard quantity. Okay, for the iron, standard price for iron is 2. Okay, calculation is 2 times 3,900 minus 800 times 5. 800 times 5 is answer is 4,000. So 3,900 minus 4,000. The answer is RM200 favorable. Okay, for the copper is calculation 600 minus 200, and we get the answer is RM400 unfavorable. Okay, so for iron is favorable and copper is unfavorable.
And now for question E, overhead expenditure variance change, which is how to calculate, which is actual hour times actual rate. We got 12,000, and then actual hour times standard rate, which is 3,400 times 3. We got 10,000 and 10,200, and then 10,200 minus 12,000, and then the final answer is 1,800 unfavorable. And then for question F, overhead efficiency variance changes. First step is actual hour times standard rate, which is 3,400 times 3, and the answer is 10,200. And then standard hour times standard rate, which is 800 and 800 times 4, and then times 3, we get the answer 9,600. And then 9,600 minus 10,200. So we got the final answer 600 unfavorable. And now for question G, budget variant expenditure for fixed overhead. The first step is actual, which is 8,800. And then budget actual hour times standard rate, which is 4,000 times 2. We get the answer is 8,000. And then 8,000 minus 8,800. we got the final answer is 800 unfavorable. And question H, volume variance on fixed overhead. First, budget actual hour times standard rate, which is 4,000 times 2. We got the answer is 8,000. And then apply standard hour times standard rate, which is 800 times 4 times 2. And then we got the answer is 6,400. And then the next step is 6,400 minus 8,000. And the final answer, and we got the final answer is 1,600 unfavorable.